The markets are at a critical point, and this could be the crash of our lifetime. Harry Dent, an American financial writer, foresees an almost 60% crash in the coming months. According to him, the entire bear market has dragged stocks down by 86% for the S&P 500 and possibly much lower for the NASDAQ index. The Russian invasion of Ukraine triggered a market reaction. Nevertheless, markets always react to political news in the short term, but it seldom has a significant impact on the overall trend. A massive crash will occur, but not as a result of Russian President Vladimir Putin's actions, but he is a fine trigger. The markets are at a critical point and we've seen a substantial correction. It could be that first crack and it's still in that league, but barely. Harry described it as barely because that first crash should be 40% or more in 2 to 3 months. We are almost 2 months into this, which is really 3, 4 or 5 weeks left to run. And it's only down a little over 20% of the NASDAQ and maybe 14 to 15% for the S&P at worst so far. It's more than a usual correction, but it has to fall dramatically early next week, or we'll start presuming it's a correction, and then we'll make another run for new highs. A slight new high near 5,000, followed by a 40 to 50% drop in 2 to 3 months, and we'll be back to comparable levels. The markets appear to be topping during this downturn. Mr. Dent continues to favor scenario 1, in which we have already reached our peak on January 4th. We're in the midst of the first crash, but it needs to continue from early next week to mid next week, or it won't happen. So this is really a good time. Harry is calling this as the last chance to sell. If the markets do head down sharply, they're gonna keep heading down sharply. If the markets are up next week, then you may want to hold on a little more. Harry Dent said we are more than overdue for a top here. We really should have been in a longer 2 to 3 year downturn between early 2020 and late 2022 for stocks bottoming, 2023 for the economy. That would have been the typical demographic cycle of 40, 20, and 90 years. Governments, on the other hand, have fouled the waters with endless money printing, according to Dent, and they're still doing it. So unless the Russian invasion escalates into a full-fledged conflict between Russia and Europe or the United States, the invasion will likely be short-lived. The stock market has other reasons to go down. The question is, did it really start on January 4th? Or Harry's second scenario would be, it starts by early to mid-April, and then it crashes into early summer in June. Same 2 to 3 months, 50% crash quickly. So it takes a 40 to 50% drop to indicate we've reached the top. Because once bubbles get rolling, they just keep going, especially when governments back them up to keep the bubble from exploding. According to Dent, this suggests that central banks, especially the Federal Reserve, are aware of the fragility of the bubble and the economy since they've been having trouble even pulling the trigger on the tapering that they've been talking about, but not quite implementing. So they should follow through, and we need to understand. A market and an economy that's been stretched now 14 years beyond its natural peak in 2007 for stocks, and the economy in early 2008. That would have been the natural peak and downturn, and then that downturn would have been like the 1930s. Harry said he was always looking for it to be down in 2008. Big crash, depression, and then a rally, and then a second depression kinda like the 1930 scenario into 2040 to 2042. The economy underneath is weak. It needs to go down, and we need to get rid of a lot of debt, so the next generation won't have to carry our debt. We need this downturn for the economy. The ECRI leading indicators are also showing we're right on a recession. So even despite all this money printing, we're likely to see the economy slow down. Dent believes we need more growth and stimulus to keep this bubble going. Any sort of slowdown, this bubble is going to burst because that's the nature of bubbles. As a result, according to Harry Dent, central banks have blown the biggest bubble in modern history. They've gone above and beyond what anyone would have expected them to do if they were acting carelessly. He said central banks don't comprehend bubbles because they've been even more terrified than they are now if they did. They have no chance of winning. Therefore, we must be prepared. This is a good time to finalize the sale of financial assets from real estate to stocks and everything else and be out of this market. And again, we might give it early next week if the markets are up. That's gonna be a sign that we could see one more new high. It'll only be a slight new high, so it's not going to be a giant rally. We might get to around 4,800 to 5,000 on the S&P and then for sure sell. But if you've already sold, Dent said that would be okay. So this is a good time to be out of stocks and a good time to wait for the natural course to follow through and see the sale of a lifetime in all financial assets in the next couple of years. This is going to be a great opportunity if you protect your assets now. Jeremy Grantham, the co-founder of GMO, has predicted the Japanese crash in 1989, the dot-com bust of 2000, and the global financial crisis of 2008. He sees something big happening, mainly on the downside. Grantham has been warning the last few months and he's been saying we're getting very near to a 50% crash. But for Harry Dent, a crash of a lifetime would be a projection of 86%. S&P 500 peak was at 4819 recently, down to the bottom trend line, which would be the same bottom trend line that 1932 hit, 670. The first crash, according to Harry, a half or more of a major bubble like this happened in the first 2 to 3 months. The average is 41% crash in 2.6 months. This one is shaping up to be bigger. Dent said central banks have stretched this bubble way longer. This second bubble burst should have been late 2019, early 2020 into late 2022. Will late 2022 be the biggest cycle bottom of our lifetimes and even bigger than 1982? So that's what it should be. While they push this up, we're gonna have to go down faster and harder. We're likely to bleed into late 2023, but Harry Dent thinks most of this bubble is going to happen this year. We've had a succession of tops. The S&P was the final top on January 4. And that means this first crash should go into about March or April. And again, megaphone pattern, it could be 58%. The target on that is 2,000 in the S&P 500. This would be the biggest first crash in history. Harry pointed out that we broke 2,100 on the Russell 2000. The S&P 500 channel broke at 4,600 and we're below that now. Bitcoin is now down 50%. The Russell 2000, the leading sector of stocks with small caps, down 20%. The NASDAQ, tech stocks, is down 15%, and the S&P down the least at 10%. Dent added that with the recent sell-off, we might have a little bounce, but there's still a long way to go. Many individuals believe that this is the bottom and that now is the time to buy. But this isn't another correction according to Harry Dent. This is almost certainly the pinnacle of our lives, and the initial crash might be as high as 58%. Now, do you agree with Harry Dent? Comment down below. Don't forget to hit the like button and subscribe. This is your top tech and trades channel. Thank you for watching and I'll see you in the next video.